U.S. investment bank JP Morgan recently labeled Chinese internet companies uninvestable. The title wiped out about $200 billion from American and Asian stock markets. But the bank is now calling it an editorial error. Don Ma talks to an expert to break down what's happening behind the scenes.
According to sources, the label uninvestable was never meant to be released. JP Morgan's editorial staff wanted the word uninvestable to be removed from the reports and be replaced with unattractive. But due to an error or oversight, the word uninvestable still slipped into some reports. Analyst Christopher Balding, founder of research company New Kite Data Labs, says JP Morgan has a conflict of interest. On one hand, the investment bank doesn't want to upset Chinese companies or authorities, and on the other hand, it also has the responsibility to investors to be clear on the risks of investing in Chinese companies.
JP Morgan faces an enormous conflict of interest. If you criticize China, the economic outlook or the accounting standards or whatever, there's a very good probability that you could be cut off from all Chinese business.
The label that Chinese internet companies are uninvestable was determined by independent analysts at JP Morgan. Is it considered irresponsible for editorial staff who don't have the expertise of analysts to change what the analysts say about investment risks?
It's definitely known that the editorial staff is there to massage words so that they come off much more polite than what they say. They're much more trained in helping to avoid political minefields and wordsmithing so that words are, let's say, softened.
Balding says that in an ideal world, JP Morgan shouldn't soften words. However, he also says that professional investors already know this fact and won't be misled.
Investors know that a buy is not really a buy, a hold is more of a sell, and a sell means, get out of this company as fast as possible. Professional investors, for the most part, know that those words might be softened.
A JP Morgan spokesperson said that whether the word uninvestable or unattractive is used in the report, they stand behind it, also saying that the two words are interchangeable. On the surface, these two words have completely different meanings, but to a professional investor, Balding says, they mean basically the same thing.
To the professional investor, they absolutely understand that those terms are nearly interchangeable. Professional investor is going to read JP Morgan research and say, I know I've met the analyst. The analyst can't say uninvestable, but when they say this, that basically means don't invest in this company.
One possible reason why JP Morgan labeled some Chinese internet companies uninvestable could be Beijing's regulatory crackdowns, which wiped out billions of dollars from the sector. Don Ma, NTD News.